All right, guys. Linzi, Jerome, welcome back. I appreciate you guys being here. Today, we're going to talk about the GbpCad trade that we took yesterday, which was the first day of the new month, first day of September. We're filming this video the following day, and I felt like it was a good idea for us to get on together. I want to talk about the P&L, talk about what we liked about the trade, what we didn't like about the trade. And I also want to talk about how we carried, and Jerome, you and I were just talking about this, how we carried yesterday's, like you would call it, momentum from a win, how we carried that into today. I think there's some value to touch on there as well. So again, I appreciate you guys being here. How are things? Linzi?
Yeah, very well, thank you.
Jerome, good? Everything's good with you?
Perfect. Everything's great.
Good. So in regards to the trade yesterday, today is Wednesday. To start the week, we had a bank holiday on Monday for the GBP pairs. Were you guys on the chart Monday watching, trying to see if there were potential trade ideas, even though there was a bank holiday?
Yeah.
Yeah, pretty much. I came in, I was just kind of analyzing. I knew that if setups presented, I had to be more selective being a bank holiday.
Right.
Just so I wouldn't get chopped around too much.
Right. I feel like the bank holiday days for me are always like good. It's not like a routine keeping day, because if, like, let's say something on NZD CAD presented and it's a GBP, I might take that trade with some small size and still get into the market. But I think it was really interesting to see that after the bank holiday, we were able to come in then on Tuesday, unbiased, just saying, hey, let's just trade what presents, not worrying about what happened yesterday, coming in and smacking a really great trade on this GCAD trade we're about to talk about. How does that, for you guys, reinforce the don't trade on bank holiday days?
I just think that when the bank holiday is there, like what you just said, we can stay away. Like for me, I could have stayed away from British pound pairs and I was looking at other pairs. And I just still kind of say to myself that, well, I was watching Euro USD that day, but that we don't have to trade every day. And I said that even today on my Twitter, we don't have to trade every day. And I think if you just get into that habit of saying, not every day is a trading day, then that keeps you still focused though, to be on the chart, to still be looking to learn and analyse on other pairs, but to know that staying flat on Monday, we can still come into the market on Tuesday and we can trade a British pound pair.
Right, and act like the bank holiday didn't exist. So on the no trade days, is there anything specifically that you guys make sure you do? Like if you don't find a trade, do you have like a little like, because for me, like on days where I don't trade, I know that I will make sure that I sit down for at least 30 minutes at the end of that day to make sure I'm going over and not like overlooking something completely. Like on days where I win trades, I'll be honest, I might put off the markups till the next day or whatever. You know what I mean? I'm talking about it enough. I'm like, I got to get off the chart. But on days where I miss trades, I really do find myself coming back and like going over the day in detail. Is there anything you guys do in particular before we go over this one?
Yeah, I still like to do my trade ideas, sit and do trade ideas and look at the pairs that are on my watch list and see what, and generate the ideas to see that I'm still being alert and I'm not missing anything. Makes sense. Like you, on the days like yesterday when we took the win, I like to just get off the charts and then maybe come back later in the day and do my daily recap. Anything
for you, Jerome?
Exactly what Linzi said. Like just coming in, just going over trade ideas, just learning to kind of have that patience really on like even today, just like a slow day, and just kind of keeping that consistency and keeping the work going really, and just doing the markups and just kind of analyzing the market. So
it's interesting for people listening. I hope you guys can hear, like when you talk about the idea of like, don't reinvent the wheel, don't try to come up with a new way to become successful. Just look at what successful people are doing and model them. It's interesting to hear you two have very similar routines to me. All three of us have been doing pretty well lately. So it's like, okay, if you're listening, model success, see that there's more work to be put in off charts, off trading time than there is actually in the trades. Like if you look at my P&L again, really quick, look how long I was in this trade before I was majority out of the trade, an hour and a half. The full trade was done within 3 hours. You know how many hours I've spent studying and doing markups and watching YouTube videos and listening to podcasts and reading books, like way more than 3 hours. But in 3 hours, I made almost 3%. I know Linzi, you pulled a little less than 2, Jerome a little bit right around her as well, right? So all of us over at least 1.5% on this trade. Yeah, I mean, that's solid. So I think for people that are watching, it's important to realize there's so much work to be done off the chart. Like as a trader, you spend way more time in study, in discussion like this, and in analysis than you actually do in live trading for the most part. 100%. You know,
Absolutely.
Some of the trades, we've seen them, like I'm sure you guys have seen my videos I've made where like I'll hold a trade for a couple of hours, it'll turn into a big move, and then I'll be able to move my stop up, and I might have a small piece on it for a few days. But the majority of my trading, and I think this goes, tell me if I'm wrong with you guys, it's in and out as quick as I can. Like I want the money and I want to be risk off, you know?
Yeah,
exactly. Yeah, I'm the
Interesting.
same. Yeah.
So let's talk about this GCAD trade. So as you guys can see, everybody can see, the move was pretty large. I mean, about 100 pips from the entry signal that we presented. It was 2 entry signals, actually. It was a D1 and A1. The first thing that I want to talk about, because I know everybody's looking at this, this was the talking point in the recap, was, okay, is that entry candle off the 21 EMA, is that candle overextended or not to qualify for the A1 formation? Jerome, what do you think before I get Linzi's take?
So initially when I was watching the trade and I took the entry, I actually sized down and kind of sized down to kind of compensate for the overextended candle. But looking back at it in hindsight, it wasn't actually overextended. So that's something obviously I'm working on with my trader emotions, is like I've built up the confidence to, you know, pull the trigger, but now I've got this in this kind of void where when I'm in the trade, I got to work on my emotions when being more in the trade management side.
And it can go back to your rules, you know, like putting a rule to the overextension. So Linzi, how did you qualify this as overextended or not?
I had said that it wasn't overextended because I had noticed that within the Asia session, there was a candle that was larger. So that's how I kind of define it, that an overextended candle to me is the largest candle of the day. And that candle wasn't the largest candle. So I didn't think it was overextended.
It's perfect. That is the exact definition that I use. And that's what I think everybody watching, that's what you should use going forward. And then I'm going to show you an example today of an overextended candle. So here, if you look, the candle she's talking about is in the Asian session from body to body. And I always, when you measure it?
Body to body.
Body to body. Yeah. So 20.5 pips here. The candle that we were looking to take entry on, 16.3. So very clearly 4 pips of a difference, at least there in the size of the candle. So not technically the overextended bar that we would look for. Just quickly, take a look at EuroCAD today. This is much more likely what we would call, this is exactly what we would call an overextended candle. Now look, this still turns out to be a winning trade. It's pushing down towards ADR now. It's great. But when you look at the candle off the 21 in this formation, you can see from the start of the day here, clearly it's the biggest bar.
It stands
out.
That's
exactly. So when you're looking at the comparison for everybody watching, now you guys can understand a little bit about exactly how we can qualify overextended or not. But if you get past the overextension, what else did you guys find as like a roadblock or something you didn't like about this trade?
I couldn't find too much wrong with it, to be honest.
Neither.
That's the thing. Yeah.
Because it had its perfect liquid 50s. There was no divergence in the way. I was looking for risk reward up to the first pivot, which I got. And then I knew I could, if it broke that pivot, then it could go to ADR level, just following the exit rules, R multiple by R multiple.
So here's the pivots, just so everybody can see. Here's the R1. It breaks, retests. And as it retests, the reason I was in it with you too, until it hit ADR, was because this retest never broke down under the 8 EMA. It just held it. So you're able to move the stop up. And as I was moving my stop, I wasn't really moving it by the R multiple. I was just keeping it outside the 21 because I just wanted it to, that's really what I've been finding works pretty well too. I have another question for you, Jerome, and I want Linzi, both of you to give me input on this. When you see the formation like this, and this might be a little complicated for people watching on YouTube that haven't seen the course, how do you justify taking the formation? I'm going to blow it up. When it doesn't break past the consolidation started here. That was the push for the new high of day. What do you say to yourself when you see something like that?
For me, basically, it's all the other confluences that come with it. So with the formation itself, I kind of only judge the 2 candles next to it. And obviously, if it kind of breaks above those 2 candles previous to that entry candle, then I'll kind of classify that as a candle formation for myself.
Makes sense. What do you think, Linzi?
Yeah, I'm pretty similar to what Jerome says. I'm just looking for to break above the 2 candles previous to it to make it the formation confirmation.
Yeah.
And then I'm bringing all my other factors in before I pull the trigger, just because it hasn't broke for a new high a day. But because there was too many things coming to be put into our favour, it was, there wasn't very many things that were going against us. That was why my confidence let me pull the trigger on that.
I liked that it was able to have a very easy to read risk reward setup
Risk reward,
with like an
yeah.
if then setting. So like
Yeah.
when this bar closes, not breaking for a new high of day, right? I'm saying to myself, okay, the next bar better stay outside the 8 and it better break for a new high. When we're that close, the next bar has to, because this is a pullback and this is a kind of like a breakout trade. That's what the A1 here is. It's a breakout for a new high of day. So when that bar shows that bullish momentum for a new high, that makes me feel very confident. Next stop would be the pivot, or unless yesterday's high is in the way, you look back, yesterday's high is basically the same price as the pivot. So then you know you're moving there. What does it do? It comes back and retests that pivot, retests that price before then moving to the green line here, which is ADR. And Linzi, you called it. You said, because it bodied through ADR, you were like, I think it could go to the, that next pivot point, the R2. And it did. It ended up moving.
It did, so I think that's something that I'm going to back test, because I know that using pivots, usually the pivots, like to say the ADR for pivots is R3 or S3.
Yeah.
So it's something that I think I'm going to obviously take note of, because you can't really back test your pivot for too long, because they don't stay on the charts.
They don't stay on, right. So you have to kind of like test it as you're going forward.
You kind of have to test it as you're going forward.
Yeah.
So it's funny to see, for me now, I'm watching to see where the pivot is, to how close it is to the ADR level. Because obviously for me, I know that I'll take the ADR level first, just because it's been tested in the system. But I'm still going to take note of the pivot points, just because I know that
potential better targets.
Yes.
Yeah. Good idea.
Yeah, I think that's definitely something to look into. Especially like for me, I thought this could go even higher. As long as it's holding the 8 EMA, who are we to say when this is going to stop? Absolutely. That's the beautiful thing about using EMAs. This yellow line tells us a lot. If it's outside that line and you're in the trade,
clear.
You just stay in the trade. Exactly. You know what I mean? Like, let's just really quick look at the 1 minute. Like when this trade took off on the 1 minute, I mean, look at that 1 minute. It held the 8 EM, and that's substantial. I mean, that's from 5:15 my time all the way until 6:30. It's an hour and 15 minutes of outside the 8 EMA on the 1 minute. That's pretty rare. You don't see that very often. So that's clearly driven by momentum. Did you guys look at the volume indicator on this as it presented?
No, I didn't actually. I was actually going off Friday's daily. That candle broke above previous consolidation, and that was a really big contributing factor to the confluence in that trade.
In the long bias chart.
Yeah. It just kind of on Friday, the daily bar just broke right through, and that's what was kind of driving my long bias.
Yeah. Yep.
Yeah.
I see that. So then what I think, Linzi, I might have sent it over to you. I don't know if I showed it to you, Jerome. What I was looking at beforehand as this presented, if you just look at the volume bars up until this 5:15, just count the previous, let's say, from 3:15 to 5:15. I mean, that's six or seven green bars and two red ones. Even if you add in these two red ones back here, it's still showing you the buyers coming in, showing you some green volume coming in, which, look, if you can read green versus red, if you believe whatever these volume bars are calculating off of, then green would mean it's probably going up, red means it's coming down. So I don't love volume for that reason. You know, I don't know how it's calculated exactly in Forex, so I don't try to act like I know. Do you guys have any idea about that?
No, I've heard mixed things, but I'm not quite sure.
So I just leave it out. It's good to look at. I like taking a little peek at it.
I think it's good to look at, maybe once you've executed the trade and you can add it in to see how it performed.
Yeah. I like the pivots better though.
Yeah, I like pivots.
So to wrap up, any big lessons from the trade, Jerome?
Yep. So I took away that just kind of not getting, like, letting my emotions get in the way, really, because like when the candle was forming, kind of just the way the momentum it had kind of coming up and just kind of making it look overextended. But because it just retraced that little bit, I should have just hit it with my proper B grade sides that, I should have been trading with.
Try not to be, maybe a reminder in that you made me think of is try like something to write down in your note. Don't be cynical, just be skeptical.
No.
Like, hey, skeptical would be, I'm going to take the trade because it's presenting a signal, but I'm going to size down. Cynical is, I'm going to wait for this because I don't know if this is right. No, it's right. The RSI was right. Everything was right. And I've had that same problem.
Exactly.
100%. Because like I am a little too cynical innately sometimes. So I have to fight that in my trading because momentum is a real thing, bro. In trading, in markets, momentum is real. So if you're on the right side of it, what are you going to say, Linz?
No, I just felt with that candle when you're watching it, there was no hesitation, and that was something that I always kind of learned when I first came in, that when you're watching a candle, if it's got no hesitation in it, you know, it's not pulling up and pulling down,
it's just strong.
It's strong. That was a strong candle. And what I kind of took from that was kind of going back, like getting in the sniffer entry, because I knew that candle was strong and it wasn't hesitating. I could have done exactly what you done, Austin, and went in and got a better risk reward set up, because I do like to have where that for me was slightly out for me, because it was a bigger stop that I don't usually, you know, my stop losses aren't usually big.
Sure.
So that was something that I learned, that when just going back to building confidence again, when you see it like this, that if you can get it on the 1 minute, it's a good place to take it.
100%. Especially again, like it's always just like you said it best about knowing where the stop loss has to go, knowing where the risk has to be clearly defined, not knowing where to buy or sell. I mean, you can make money in a buy or sell in an uptrend or a downtrend if you have a stop loss placed in a certain position. Eventually, you can, you know what I mean. So the entry thing is not the most important. It's the knowing where to define your risk, and then knowing how to size in, like you were saying, Jerome. But now I want to talk about how that carried into today. You said it before we got on the call, Jerome, how you were like, sometimes I come into the next day riding a high a little bit, and you got to keep it in tune, keep it in check. So talk to me about the thoughts there.
Yeah, so pretty much, so coming in from a win, you know, especially the start of a month as well. So a really good start. And basically like previous wins, I'll come in the next trading day with just kind of really, like Austin was saying, like on a high, and just kind of egotistic and just kind of, let's make money, you know, let's do it. So that I've kind of learned I've learned my lesson from that. I've been burnt from that kind of mindset. So being more mindful this, like today, especially coming in today, there was the A1 setup that presented, and I was ready to take it, but I just took a breath, watched yesterday, had a good win. I could just kind of come in more level-headed, as I was saying, and just kind of just let it go.
Gave yourself that distance to like actually leave it as an idea, where before you feel like you might have jumped into it. Is that what you're saying?
100%. Exactly.
Just because you won the trade yesterday, you're like,
exactly. Let's do it. Let's make some
it probably it would feel really good, I'm sure, if like, let's say that idea on EuroCAD, if the overextended candle had not worked out, you would feel really good about yourself. You'd be like, yeah man, I'm glad I didn't take that. You know what I mean? So the fact that you did, which is to drive home the point that the outcomes are so not important when you're looking at this. It's more about the process. So for you to not take that trade is the most important point. So 100%. So pat on the back to you, bro. I'm proud of you. That's
well done.
Lindsay, what about you? Anything you take from GCAD into today? Anything that stands out? I mean,
no,
you don't lose trades, so it's like, do you even?
I don't. I really am so unemotional about it all. I just come back to the next day, and as soon as I came to the charts today, I was like, this watch list is tiny. There was things like, even on my watch list, there was still stuff going against the trades for me. Right. So I just come in and just follow, ideas. I've got them all marked up, but there was nothing that I was saying I was going to, like GN, if it had presented, I still wasn't really happy of pulling the trigger on it, because I knew the Asia range had been blown out.
Right.
So I would just take that as an idea, trade it up. And I think when you're doing that, you're generating ideas, you're kind of getting it out there, you're getting it off yourself, because you're still working, you're still at the trading desk, and you don't have to, every day doesn't have to be a trading day. It can just be a study day.
Yeah, absolutely. And then
if there's nothing there, don't make I think it's about, don't make there be something there when there's actually not anything there.
Exactly. Because taking the loss there is almost like it's just as bad as it's the worst thing you could do, rather than, okay, I know this could probably fall, like GBP and TD. I know this can probably come down. I'm going to read this, mark this up. I'm going to imaginary put my million lot position on it, and I'm going to see this thing through. But in reality, where we live and where we're actually paying rent, you know, I'm not going to put my hard-earned money into this, because I could have a better setup tomorrow. You know, it's NFP week too, so that's the other thing to think about. It's like seeing ahead and knowing, look, it's Wednesday, Friday's NFP. We know this week is typically slow, and we know next week, the week after, always picks up for us. It always does. So it's like, why stretch? So I think
I think that is I believe
you
that
guys show a really good level of discipline, a really good understanding of patience. And that's why I love doing these videos with you guys, because I think people take a lot of value in that. People love the idea of the action, and they love the idea of the trader lifestyle. You know,
like it could be, so GM, we could mark it up and it fell. But that to me wasn't a good trade, because there's too many things going against us. You know, it's in the range, it's blowing out. We've got a rising liquid 50. So even if we did win that trade, that wasn't a good trade.
Exactly.
And I
Yeah,
think that people need to identify that kind of whether your good trades and your bad trades.
So now going into, like I said, the rest of the week with NFP, really the rest of the month now, as we're seeing, I think, mixed volatility across all other markets. We seem to be finding a lot of stability in our trading. You know what I mean? It's really kind of, if you look at it, we're being so, specifically the three of us have been very selective, very picky, very the best word is selective with the trading. While stocks are going crazy, you know, splits and then they go higher. They're going, it's crazy. Plus metals right now, crazy. Crypto rate, I mean, today taking a big hit, very volatile everywhere else, but yet Forex, it's stable. We show up, we see if there's a trade, we hit it, we go away. We come back the next day, do it again. It's like rinse, repeat. It's almost like it's the easiest market to trade. And you would hate to use the word easy and trading in the same sentence, because if you treat it like a business, it's still going to be disciplined. And somewhat difficult, but it definitely comparatively, I think, is like the best time ever to be doing what we're doing, to be actually active in the Forex market. Don't you guys agree?
Absolutely. I think that's why
especially with the system.
I've never went in.
It's never been better.
Market.
Right. No, so this is good stuff. So I'm hoping that those of you watching and listening on YouTube and Spotify everywhere, we're hoping that you guys find value in these conversations. Hope you find some value in going over the trade as well. So let us know if you have any questions. Please drop comments below. You can always connect with Jerome, Linzi, and myself. I'll put all the links down in the description to this video or podcast, so you guys can check that out as well and say hello. And if you have any questions, we're always here to help. That's why we're doing these videos. So don't hesitate to reach out. Jerome, thank you, brother. Linzi, I appreciate you always.
Thank you, Austin.
Good stuff, guys. Thank you.
Appreciate it.